Day 96. The RSI strategy is built. It waits for oversold conditions. It buys when the market looks beaten down. It sits out otherwise. Now the backtest tells you whether that patience paid off. Here is what the numbers returned. Start equity was $100,000. End equity came back at $118,621.41. That is a net profit of 18.621%. The compounding annual return was 5.431%. That is well above the buy and hold baseline of 1.914%. And it is competitive with the SMA crossover's 6.272%. But it was achieved with far fewer trades. Total orders was just four trades over the entire backtest period. Win rate was 100%. Average win was 8.93%. Not a single completed trade was a loser. The strategy only entered when conditions were right, and every entry it took worked out. Drawdown was 13.8%. Drawdown recovery was 482 days. Both are better than the SMA crossover's numbers. Now look at the Sharpe ratio. It is negative 0.169. The Sortino ratio is also negative at 0.067. That seems contradictory. How does a strategy with a 100% win rate produce a negative Sharpe? Because Sharpe measures risk-adjusted return relative to a risk-free rate. It also accounts for all the time your capital was idle. While the RSI strategy waited for signals, your money sat doing nothing. Those flat stretches dragged the ratio down, even if every actual trade was profitable. Total fees were just $4.44, almost nothing. PSR came in at 12.139%. That means there is real uncertainty about whether this Sharpe would hold up over a longer sample. 4 trades is not enough history to be confident. That is the honest read on the RSI strategy. Selective, clean, low cost, but not yet proven at scale.